Hello guys, this is Kelvin from Beyond Candlesticks. Now today we're looking at value. All traders must learn to buy and buy at value. Sell above value and buy below value or at value. Now we're just going to look at this chart here. This has got daily value area. This grey area here, I'll just change my mouse into a mouse instead of a crosshair so you can see. Now, this grey area is what we call the value area. This profile is a volume profile, much the same as a market profile, but focused on volume instead of price at time. So now the blue is where we get outside of the value area. There we go, outside of the grey, which is the grey is the value area. And the value area is where most trades take place. Buyers and sellers are happy to conduct business in this area. Outside of this area, they're not so happy. So you'll find volume is reduced in these blue areas. Now, one of the key things to note is that price usually likes to come back to value, because traders like to trade at value. So in general, price likes to come back to value. So as you can see in this picture, where price is just concentrated in this area and then it moves towards the top of value. So here it decides it wants to come back to value, so it trades back in, and it actually trades back into here, decides it wants to go back into value. So normally the market rotates in the value area until it breaks out of that area to seek value elsewhere, and the market then moves down and down and down and down out of value, and it's this point it's decided that it tried to create some value in this area, but it decided that no, it wants to go back to value. It's rejecting this area. It doesn't want this area to be value. Down here is undervalued. So it's gone back up to seek value. And it's found value in the whole value area. Then it's gone to the top. This time it's deciding to seek value at a higher price. So it moves up. This is the next day, and it comes back to value here high of the previous day. It then rejects that value area, doesn't want to come back in here, and it goes on to seek value elsewhere. And during the day it found value in this area between the green and the red. So the prices here is value. So if you buy anywhere at the bottom of value, you're doing well. You sell anywhere at the top of value, you're doing well. So let's see how this translates. In order to find the correct places to buy, you need to look at the previous day's value. So this is the previous day, and this is the previous day's value area. So if we're looking for trades today, we look for the value area of yesterday. So now let's look at this area and let's transfer this area. We have this green dotted area and the red that makes it clear for us. So if I just move my chart so that you can get a good picture. See if I can. Oops, what have I done? Escape. Right. Basically, we want to just make things a bit better for you. There we go. I'm going to make it bigger now. Lovely. Right, guys. Here we go. So this is yesterday's value, and this is today's value that we're building up this grey area today inside of the overall value area of yesterday. At the moment we're trading in yesterday's value area, As you can see, the green to the red of yesterday. The inner green and red is today's value area, and this is yesterday's value area. And you can see we're trading at the extremes and coming back in. So if you wanted a very good trade location today, because we have opened in value. We opened today in value. So we opened in yesterday's value area. Yeah, yesterday's value area, we opened in it. So therefore, we now look to trade any movement to the edges back in. That is a trade strategy. And the locations are the extremes. Trading back in because we opened in value. We have decided today value is yesterday's value. Right. So let's look how the market reacted so far. It traded around, it dropped down from its open, and then it went up. And it went up to yesterday's extreme. Yesterday's value area high. And this is where the rejection took place. It went out and promptly came back in. And it's rejected it. And then decided to trade back down. And where did it trade back down to? To the exact point of yesterday's value area low. It has bounced off it and it's gone back to value. It's always seeking value. So at the moment, today's market is contained within the value area. This blue line here is yesterday's point of control. Look at that. Yesterday's point of control. And the market reacted today at yesterday's point of control. Now, the most important areas are yesterday's value area high and value area low. Today's value area low is here and value area high is here. Now, what do we do for our next trade? So if we're early enough, we get these trades. So the moment we see the market opens in yesterday's value, we want to be looking for these reversals. Yeah? These are extremely high probability trades. The next time it comes to these areas, it's not as high probability. It may bounce off, but the probability is less. So we need to always be aware of, has it done it already? Has it actually bounced off this area already? Has it rejected this area already? And yes, it has. So the next time the market comes back down here, there's two things you can do. You can trade the double bottom, or you could trade the run through. The double bottom bounce, or the failure and run through. And likewise, if the market comes up here, you trade the double top or the continuation, the breakout. And which way you trade depends upon order flow. However, if you get these first moves, like this very first move, if you get these very first moves, order flow is less important, because usually the percentage in your favor that order flow will be in your favor is high. So if you don't have order flow tools and all you have is this, you can take these first trades. I call them virgin areas. It's never been used yet. And these you can do without order flow. The probabilities are high enough to take the risk. When you have order flow, it doesn't matter if price comes here 10 times. You have a good understanding of what price is intending to do, because you have the order flow at your disposal, especially if you can read it well. So this is what I want to give to you guys, that volume profile, market profile of the previous day is very helpful in finding excellent trade locations for reversals. Now before I wrap up this video, I'm just going to expand on the theory and just show you another context. This is a video we did a video yesterday on finding value and trade location, finding reversals it was, and I'll show you exactly what happened in a similar situation, different scenario. So here what we had was, and this happened twice, so I'm going to show you the two examples just so it's cemented into your mindset. Here we have, I'll just make this a bit smaller now. Here we have, I think this was yesterday, this was Friday, I think this was Thursday. So here we go, Thursday. Market had a very large, because we had some major volatility last week, so the market had some large moves, had a very large range. Anyway, it made its value area here, as you can see, the grey area. Now what we had the market opening outside of value. This is the next day now. The market opened outside of value. There's value of previous day, so we're below value. So now we're looking to continue going down. So what we're looking for now is the market to, because it always seeks to go back to value, we're looking for the market to go back to its previous day's value, which is this point. As you can see, I've got this thick area of lines, which was significant for my trading yesterday. But if I make this bigger, you will see somewhere the green dotted line, yeah, of yesterday's value area, low. Not yesterday, Thursday's value area low, yeah? And what happened? What we look for is a market to go back to that point, which it does. As you can see, it opened below value. There was value, opened below value on Friday, and it went up to previous value and bounced off almost by the tick, just a few ticks probably, and bounced off. Lots of profits in there, lots of meat. And the market regularly does this. It goes back to value. And when you know this, guys, you can make money out, you can take money out of the market so easily. So it goes back to value and then it rejects it and seeks value elsewhere. Okay, moving on. So that was Friday. The market then opened on Monday, and where did it open? Again, outside of value. It opened outside of Friday's value. So what do we want the market to do? We want it to come back to value, to Friday's value, to test it. Let's have a look. Let's make this a bit bigger now and see what happens. Here we go. The green line, let's spot that green line. There she goes. There's a green dash. There's a green dash. And I put these lines in. You'll see it in my video that I did yesterday. Yesterday being February the 12th. Okay. Now, this blue line was my entry. I traded this market, and this was my entry. I entered just a bit above because I had a grey line just a bit above it, and the blue line was my secondary option. But this is the area. The whole of this area is a reversal area. So now the market, because we mustn't look at this thing as to the tick. Yeah, it's the area, the reversal area. So it come back to the value area of the previous day. So on Monday it came back to Friday's value area, came back down to the top of the value area I, and tested it and flatly rejected it. The virgin moment is the time you can do this trade even without order flow. And it goes, and it goes, And where does it go, guys? It goes and it makes a high for the day. Makes a high for the day. So guys, this is two examples. One where the market moved down, holding below the value area of the previous day, went back up to test the lower the lower value area of the previous day and rejected it and made a low, a further low. And then the day after, which was yesterday, the market took the high out, opened outside of value, took the high out, came back to test the bottom, came back to test the value area I of the previous day, and flatly rejected that and bounced off. It doesn't always reject it, but the virgin moment you usually get a high percentage of rejection, and it's a good trade. It's worth the trade. The amount of ticks in it, risk to reward. Imagine if you add your stop below here. The risk to reward of trading anywhere in this area to get anywhere up here. Now, even here is a high risk reward, let alone up here. So that's how you can trade these value area, guys, for good locations, trade locations. They're excellent trade locations. They're excellent ways of getting lots of ticks out of the market, lots of property. For those who don't even have all the professional tools for order flow, it's excellent opportunity to get some money out of the market and get yourself some money to buy those extra tools that makes your trading even more profitable. So guys, this is Calvin. I hope it was all very informative. I hope you learned from this. I hope you want to learn some more. Subscribe, like, and share. Please leave comments. We're new on the YouTube channel. We're not new in trading. We're new in releasing our videos to the YouTube world. And we want to get as much of you guys as possible. And, you know, there are going to be some great opportunities if you stick with us, guys. We're also in the crypto world, and we will be giving out some crypto information. But guys, go over to our website, Beyond Candlesticks, www.beyondcandlesticks.com. We have some wonderful courses. 90-day trading course is an excellent course. Teaches you everything you need to know to extract regular, consistent profits from the market. We delve into information like market profile. We teach you how to read it properly. You know, I'm giving you a broad view on it at the moment. Even this broad view, you can make money from what I've told you today. But the course will give you greater information, greater details, teaches you how to trade in an advanced way. From a beginner to an advanced trader, you've got lots to learn on this course. Guys, hope you like it. Hit the subscribe button, hit the like button, share, pass it around to everyone you know. And let's get this channel the biggest channel on YouTube for learning, because we're giving you stuff to make you make real money. Okay guys, this is Calvin signing off. Thank you.